What is going on, everybody? It is February 22nd, 2024. Day log episode of NQ live stream review. So if you guys were a part of the live stream today, be able to see I took another loss. I took 2 losses in a row yesterday and today. So in total, I think today was 16 handles. Yesterday was about 20. So approximately about 46 handles. And then Monday was 50. So it's basically a break-even week. I'll go over today. There's nothing in hindsight. I even reviewed it myself. There's nothing I would have changed. And it's a good lesson overall to look at. I think that majority of people, if you do watch content out there, they're not going to tell you about losses and how to really deal with them and multiple string of losses and what that really does to your psyche as an analyst. Most people, they don't, excuse me, I'm on the wrong asset class. They don't talk about how to handle drawdown or even to really talk about it because, obviously they don't want to talk about it. It's not a easy subject, but I think if it's something that you struggle with, it's perfectly okay to struggle with it. But there's some things that I can say that will help you out of that, which it's normal. It's completely normal. So if you're in drawdown, that's a normal feeling. It's a normal part of the process. Even if you're a break-even trader, it's completely normal. I was break-even for a while, and there's months and periods of time where I'll be break-even and I'm not in profit and I'm not profiting. But when you have those months and weeks where you are doing better and you're in profit, as long as you're able to maintain that risk and you're able to manage it perfectly, then you're going to end up winning in the end. It's the main focus that I've always told all of you is to really focus on your risks over technicals, over everything else. As we talk about technicals in here, I always discuss psychology and risk management because those are the most important things that you can possibly hold as an analyst. And it may be boring to some of you. You don't want to hear it. You just want to hear about the technicals. But I have this on my mind today after, 2 losses. It doesn't mean much to me, but I want to speak from this perspective because this will happen throughout your career a lot. And you have to realize when it starts happening to you, not to freak out. You have to maintain composure, meaning you have to do the same actions as if you were doing before. You don't change anything. The only thing that you would be changing is your risk. So you would be reducing your risk. That's not an easy thing to do. As I say that, it's a hard thing to do. It's a hard thing to reduce your risk in half and size it down and want to go for half of what you were profiting, you lost before, because you feel as if you're losing out on time, right? You feel like, it's not good enough. You're not satisfied. You're not content with that profit that you just made because, you could have made your entire loss back and you would have been right where you were before. And especially with, trading challenges and things like this, it's really hard because you want to be able to excel through these challenges and get funded and move through it quickly. But if you move into a funded phase, this is the main key concept, is being able to be very consistent with this. So I don't have too much else on my mind to talk about on that, but I want you to know that it's normal, that it's okay, and that if you follow certain procedures, you maintain composure, you're going to end up winning in the end. The main focus you have to keep, like to the left of me in my trading room, you could say, on my desk, I have a list of psychological, it's called Injecting Logic Statements from Jared Tindler's book, The Mental Game of Trading. I also have a map over my tilt section. I also have a map over my fear. I also have a map over greed. I have, just eyeballing, I have about 15 note cards in front of me. And the reason I have these things in front of me is because it constantly reminds me of a lot of things, especially when I'm in drawdown and when I'm maybe taking a string of losses, is that I have to read these things. It's very easy when you're winning to get blinded by that euphoric feeling. You feel as if, you're never going to really take another loss. You're never going to go back into that state of drawdown and into those losing streaks, but it's going to happen. So having something in front of you, whether it's on your trading desk, your laptop, whatever it is, even before a session, we're in a profession just like an athlete. So think about people that play football, basketball, soccer, tennis, whatever it is. What do you see them doing before a game? You see them warming up, right? You see them stretching, you see them doing drills, you see them doing certain things. What are you doing before a session? For me, I'm going over my injecting logic statements. So for an example, for tilt, I have, this is personally uniquely for me, is think about tomorrow's trading and save your capital and yourself for the next day. If I protect myself today, I can try again tomorrow. Think about the long-term game plan. The model works and we'll be fine again soon. So that's just one injecting logic statement uniquely tailored to me that I've worked out. I have about 10 others that go through certain different emotions. And I have things in front of me that are tailored to me. And I read these things, I go over my map, which means I know each level of my tilt, I know each level of my fear. So I know when I'm about to really start tilting. And I'm not saying that I'm perfect and I'm able to do this, because it takes a lot of hard work not to get myself to tilt. When I'm angry, when I'm pissed off, when I'm losing, it's like somebody poured gasoline into my head. I want to punch somebody in the face. I'm not an easy person to be around, especially if I'm in a drawdown phase. But I have to maintain composure. I have to keep reminding myself constantly, when you're in drawdown, this is where the work begins. This is where you're going to feel as if you feel your muscles like a workout burning. It's hard. It's not easy. You're in a point of adversity and you have to maintain that composure and see the light through. So I'm not going to go too much. I know I've already gone a little bit too deep into psychology. I catch myself, but I think even that rant right there, I mean, that's more important than anything I'm going to discuss in the charts today. I mean, it truly is. It's the truth. And if you want to be successful, you want to be profitable, you're here for actually being profitable, write down those notes, write down those gems. Those are very important. So as far as the weekly time frame on NQ, we've discussed how the beginning of the week I was seeing how we traded down into this inefficiency. And I think this is a cool study, is if you take this away and you look at wicks, they will act as gaps, especially the CE of wicks. So the 50% of wicks, or even the 25%, we didn't quite reach down into it, but just look at how we reached down into the wick in here and rejected off of that. Also coupled with the parent fair value gap in here. And then we displaced away from it. So I was telling you guys yesterday, I was extremely bullish on IQ. There was no reason for me to look for lower prices. And I will discuss why I was looking for lower prices today. So from here, I'm going to be looking at this buy side liquidity pool, which is resting at 18,123-ish. But you get the point, that high there. Relative equal highs in here. We discussed yesterday, I was looking for that high up there. Gravitate towards it, captured it today. Extremely bullish. This is very volatile. This is a very fast ranging type of market. And ICT's discussed that this year is probably going to bring us that. Even though the market's moving a lot, it doesn't mean it's high probability. That may be a mind-blowing concept to all of you, but yes, if the market's moving in a very volatile ranging movement, there's going to be a lot of whipsawing, whipping back and forth. And if you're not prepared to be in some type of, fast market where you can be taken out in a second, and, with a lot of risk, I mean, you're going to overtrade, you're going to over risk. So you have to be aware of the market that we're in. We moved 400 handles in one day. In the last 2 days from this low, we've moved almost, I think, 1,000 points. Excuse me. 700 points. It's still a very significant movement in the last 2 days. We moved 700 points in NASDAQ, which is incredible. So you have to be aware of that. I've always told all of you, I don't do particularly well in very large range type of markets, because when there's very little run on stops, I don't have the ability to trust price to long it in such a premium. It's very difficult for me to do so, even as experienced as I am. There's certain signatures and times when I am able to do so, but it makes it difficult, regardless, I think, of how experienced you are. I mean, if you look at ICT today, look at his post on YouTube, he talked about it as well. I mean, he didn't even trade today. So all of you who may have looked at today and may have regretted and seen all of this happen and FOMO'd and be like, man, I could have captured this whole move. Our own mentor didn't even trade today. Like, think about that for a second. Think about that statement. And I don't care what anybody says. That doesn't mean he's bad as a trader. I don't care what anybody says. That means he probably knows something that, not that we don't know, but he's being smart. He's being diligent and he's practicing risk management and patience, especially in a market that's ranging like this. It's very, very fast. You have to be very careful with it. So I will discuss what happened today. I'll reel it back, but these are the kind of the points of interest. I was highlighting the buy side liquidity above this high as a potential draw on liquidity today. We went ahead and stabbed up into that. This was the next level. I just didn't believe that there was enough range on the day to get there. So we moved a lot. Let's look down into a 15-minute time frame or even a 5-minute. So the opening range was very sloppy, and you can't always be in the perfect time or perfect session. I mean, if I could go back in hindsight and tell myself to trade a session, it actually would have been lunch. It would have been in lunchtime. It had the best, cleanest, easiest moves. If these moves happened in the silver bullet, man, it would have been so easy. So 15-minute time frame, we dip down into, this is the open, dip down into this inefficiency here, climbed higher above buy side liquidity. And I was annotating how I really wasn't willing to push price lower in the beginning of the session because the narrative was bullish, right? So those are inefficiencies in here. I'm going to take this away for a second. But this is the one that I ended up trying to short off of, and I'll show you. Now refine the 15-minute into this BISI there. You can see we opened and immediately displaced higher. So as soon as we climbed above the buy side liquidity, we had a nice rejection lower. And I didn't spot this until after the session, but there's a small inefficiency, and this is where I ended up trying to short underneath, and I got stopped out. But if you go down into a 1-minute time frame now, take this away for a second. You can see right from the open we had a major displacement higher, and I was waiting particularly for the silver bullet. Silver bullet wasn't until this point in time, right here, this candle. So I wasn't willing to short. There's plenty of options in here where you could have seen this as a short opportunity, but I was annotating how, to me, the narrative was bullish, right? So I didn't really want to short today. I was electing in the beginning of the silver bullet to just stay on the sidelines. If I had a gun in my head, obviously I was looking at higher prices. I was predicting this high to be ran, which it beautifully ran it. So we took out the high here off of this inversion, so this SIBI, and even there's a BISI in here, so this fair value gap there. So you have the inversion plus the fair value gap there. That's a really strong entry pattern. But if you look at the delivery price, I just wasn't willing to participate in kind of all that chop. If you go back in time, I annotated in real time how this fair value gap was the last point of interest because we started to displace higher from here. And I said, if it's going to run for the buy side, it needs to do it in this fair value gap. So I had a limit at one point in time on this little inefficiency. I was going to see if it could reach down into it. Of course, I didn't know that we were going to reverse as soon as we took the buy side. But I elected to take the limit away because we reached the terminus, so it wasn't valid anymore. Price was in here. There was a 5-minute. I don't have it on the screen, but if you go back in the live session, I was able to delegate how I was contemplating if I should take another long in here. Not another long, but if I should take a long in here. And my intuition was kind of telling me that I shouldn't really look to long because we turtle soup the high. This is the 1 hour for value gap in there. We displaced off of it. So as soon as we dropped off lower in here, I was extending out. Actually, this BISI turned into a inversion. So you do this real quick. As soon as we dropped lower in here, I was aiming for the sell side liquidity. And now this is against the overall narrative. But if I'm in an understanding that we've been in a premium all day, we've displaced higher very rapidly, very little retracements overnight, very little run on stops, sell stops that is, and we've displaced lower, my idea when I'm taking this short is price is going back into the daily range. So think about power of 3, open, high, low, and close. To me, I'm thinking that this is setting potentially the high of the day, or at least that point in time of the session, setting the high, price is dropping off lower. We form a SIBI here with the inversion. So to me, I'm expecting at least a run underneath the sell side liquidity and potentially a run underneath here. And if then we could go higher, because I can't make a case in here for price to go higher. There will be times when price basically utilizes classic support and resistance, or in that sense. And all it really is doing is engineering liquidity. So we're engineering sell side in here. At one point or another, price will look to seek the sell side in here. There's a lot of sell side liquidity. So I entered in here. My stop loss is above the high. I was going to take out at least half of the position if we tagged the lows in here. So from there, it was about 30 handles. And if I was able to get underneath the lows, I would take out half the position and I would be looking for the lows underneath there. But ultimately, I was stopped out. So there's nothing else I would change. And there's going to be points of time where you reach your maturity where there just simply isn't anything else you can do. Like that may be a epiphany to a lot of you, but there's simply part of your model where you wouldn't change a thing. And I'm happy with that. That's a job well done by me. Is I couldn't have seen any other position in here. I wouldn't have went long in here. There was nothing for me to stay out of the position. It was simply my model and I executed on it. That's a job well done. If I didn't execute on my model, that would be a mistake. I would actually be upset. So even though I took a loss, I'm happy about it. And that's reaching maturity in your own career, is where you're happy that you're taking losses on your own model and you wouldn't have changed anything. So if I had to make any adjustments, I wouldn't. It's simply a part of the model and simply part of the probabilities and the things that we do as analysts and as a trader. Is you're going to take losses and there's going to be a certain set amount of them throughout your, course of career. So this is just one of them. And again, I wouldn't change anything. So from here, moving into lunch, this is going into lunch hour. I mean, it was just beautiful price action, beautiful, because we ended up taking out the buy side here. We dropped down into a discount for value gap there, displaced higher. We dropped down into this inefficiency here, displaced higher again, dropped down into this little inefficiency. And I mean, this is you can see it's not very expanding quickly, is what I want to say. It's not very large range candles displacement wise, but you can see the price action of the structure is you're just looking at higher highs and higher lows. It's basic market structure and looking at discounts. I mean, this to me is a beautiful pattern right here. When you're looking at the dealing range from this low to that high in a 1 minute, price reaches down into a discount for value gap. These down close candles will act as a bullish order block and price rips off higher. Look to the left of you on that run up. There's a inversion here. Price utilizes that to displace higher. And the whole day just kept ripping higher. I mean, at this point in time, I really just don't want to belong this. I mean, we're in such a premium. I don't know how far this is going to go. At this point in time, it's reaching all my terminus, like my objectives. I mean, this high up here was really for the day 1826. But as soon as we reached that, I couldn't see anything else. On a 5 minute, if you look at this area in here, there's a nice fair value gap on the 5 minute, but we reached down into this fair value gap there, displaced higher. Another inefficiency here. Another one here. And again, I'm just annotating this. Not that I would have taken this in real time, but I'm just explaining how price is reacting. And then we ultimately reached into that premium high up there. Look at this old new week opening gap. I guess that's a coincidence, right? Algorithmic price action right there. So I'm not going to go too far. I know the video is already a little bit too long, but for those who are in it to learn, I hope today was useful. Again, there's nothing else I would have done differently. If you took the same loss, I mean, again, don't beat yourself up. Sometimes it happens and it is what it is. I mean, the only thing is this is an example of trading against the overall narrative, but there's times when I'm able to trade against the narrative when I have the idea in my mind where price is going to retrace back into the daily range, or at least take out some short-term sell side liquidity before we expand higher. And all of this was happening, again, my entry was happening within the end of silver bullet macro. So at 10:50 it was coming into it to 11:10. And that was kind of another supporting factor. But just ended up not going my way. And there's nothing I can do about it. I can't sit here and complain and bitch and whine. It's just part of the process. So I hope this video was useful. I hope you're able to learn something today. I will be live tomorrow for the last day of the week, 15 minutes before the open. And until then, good. Good luck in your trading, everybody. Be safe.